Hi guys, check my little logo in the background. Hey. Hope you're all doing okay. It's actually doing me head in that, so let's. And then this happens, so that's why my camera's been being turned off. So shut that off. Yeah, so just banging some stuff together for the lads. Going to be a video dedicated to signature patterns and bankers boxes, confirmations, everything that we look for at the beginning of a trade, and we'll just break simple pair down like GU, everyone can follow. So ultimately we're looking for these big candles like that. Look at that. That's a big bank push. Okay. That happened 2 o'clock, 12th of January. Okay. And it sort of poked out a bit just to clear out. And if you'd have seen that, we are in the hour view here. It came back down, retested itself, then broke the structure again. Engulfing setup. Yeah, he'd been sat in it for 2 days, but then it ultimately took off. These are the power of these engulfing setups, Could be a low. Previous highs, it give you, let's just go in a little bit. Give you 4%. But it did go for, this is in the hour, guys. So like now, there's an engulfing just been pushed out. You wait for it to break. If it breaks, it's valid. Get sat on it. You could wait for that confirmation of a break. That was where it was last comfortable. It's just broke through that. There's a powerful one. It's just how long do you want to wait? Do you want to wait for it to come back down here? That's totally your decision. When it gets down here, then we look for a signature for it to push it back up. You've got that big candle there. Massive engulfing setup, which you'll more than likely get a one-to-one reaction off. 1-to-1, 1-to-2, just on the sole fact of how big it is. One that failed there, look, but you were selling. So you wouldn't have been looking for a buy, you'd have been up here looking for a sell. Structure broke. So it needs to come back to find its structure, which was that candle. Yeah. Break that candle down, it give you previous lows. Saying, guys, this is the 1 hour, See, I'd have been looking for this. Big engulfing setup. Set on the candle. Yeah, we are in the hour, so it'd be quite a big. Could be your red or your green, whichever one you're up feeling. You're only catching that low there. For a quick 2.5. I mean, if you wanted to, with it going sideways and carrying on down, possibly cover that. Got 6%, but conservatively you'd have took 3. With that low there, got 3% out of it. And that's the power of these here. Engulf within that time frame they came back. Same again next to it. Engulfing. came back, drop, you know, so you're catching 1, 2, the order flow, but you're waiting for these to come out, not just jumping like, yes, you'd have got that. It's risky. Engulf, took some of the IPA. You're engulfing so there. Price is actually here, isn't it? Moment. That line is, I think. Yeah. So you'd be marking up your highs with it, then mark up your candle. See whereabouts it is in between that. So that's the high of that structure, and that's that banker's candle. So we're just inside that banker's candle. So we'll have a quick flick out into the 4. See what's going over here. Okay, so there's all reason to go up and there's all reason to go down here. So we've blasted through with an imbalanced candle last time. It's rejected. It broke above. Blasted through. So there's something here. Yeah, we're inside that banker's candle. We've had an engulfing 4-hour. I'd be looking up here. That one draws my eye. It's the last green before the red slope out. So that's your high. So you could see him throw out, tag that candle, and then come back to clear this up. You have a big imbalance section down here. Sat on an engulfing move. But you're going to need world news to do that, because like we talk, it's a gradual climb. Yes, you have these sharp moves, but nothing on that scale. You know, from that entry to that to where we are now, it's like nearly 1,000 points. I can't remember the last time we had a 1,000-point candle. So, you know, there's plenty of opportunities. If we've got 2 bank moves now, one that we're inside and then one sat above it, and then that's the high. So again, that one there sat within that. That came back, found its medium, tabbed the candle, took off. Got a big sell that's created a buy. Can possibly see it come up, tag this. Now we're inside this, taking 2 orders, 2 massive areas that are full of orders back, and then coming back to clear this. So we're in an area now where that bank move, and then your high, you want to be looking for signature patterns. You know, we see it come up now. Take out the highs of that move. Swing low to take that move again, because it's only come back once. Back to mitigate. and then down for the lower positions. There's your, at the moment, there's your box. You know, and where we are, obviously sitting near the two bank moves and the previous highs. If they're looking to carry on up, you're going to create a higher high and then a higher low, which is more than likely you'll see, and then it'll fall off again to take possibly half of that, maybe tap that candle. But with that IPA there, I'll possibly say it'll come to maybe levels around there. See where it's got a line there, and then all them sit on it. That bank move sits on it, you know. So that's a very hot area. Look, rejected there, blasted through there, made a bank move there, big bank move at that price there. So yeah, it's a good area for a rejection. So we've had plenty of orders, released candles and all sorts within that candle. And then we look again for the sweep, retracement, jump in. But I wanted to focus mainly on the signature patterns in the lower time frames. Not the lower, yeah, let's go 5, because a lot of us trade around there. So leave that on, see what happens with that. There you go. This was beautiful because it left it engulfing at the end of it. Okay, came up. After coming down and then made a low, created an engulfing move, and it came up, took all the highs, mitigated from that engulfing move there. Big engulfing move, came back, give you your previous highs, but then it liquidated. Would have caught a few people out there if they just trade engulfings, but if you use that just as a reach out to then reach down and take the lows and then leave that footprint behind, you know, you've got yourself a lovely trade off there. Yeah, you were sat in it, but it only came draw down once, twice, 3 times. You know, so 15 minutes of drawdown through the whole trade. It's not too bad. Again, highs, what you're looking for. I was saying last night, I need to be a bit more conservative. Like there, 4%, you know, you're pretty much done for the week. So yeah, the main thing is, guys, looking for an accumulation build up. See, that's a perfect example, really. It could have been nice with equal highs, equal lows, but you've let Asia play. Then they've swept at about 3. You're coming to screen at about 7, 6, 7. You know, there was multiple opportunities to get in off that candle. Well, there were 3. That one and the one next to it. And then when it broke again, it retested that same candle, but just came into it a bit more. Came to the same level as that way. And then took off. So once it's happened, then it breaks again, retest the same candle. You know, I'm guilty of this. I've waited, it broke again, and then I've gone to this candle or that candle, covered my lows, and this is where I'm getting snapped out. But yeah, the power of accumulation into an engulfing move seems to be a beautiful thing that we can be looking at, guys. Here, accumulation, take back, just took the highs, didn't bother, took the lows, and then we're waiting. You got an engulf there, you got an engulf there. But then when it came up, retested the highs, left that behind. At that point, once these little wicky ones had appeared, that candle broke it, so you'd be waiting on that. So you'd have got in on that engulfing setup there. Literally minimal drawdown. Cover your lows. Look for your previous highs, or just set to a 1 to 5. If you're coming out of a dip, you know, it's what you believe you're comfortable taking out of the market. So for me, it's between 3 and 5%. For others, it might be 1, might be 2. But I've built a belief within myself that I'm only going to take trades that have an accumulation build up, that have left a bank move on its way through out of the accumulation, that is engulfed. If there's IPA there, even better. Fib zone lines up, you know, there's so many things that can help with the probability of the market going in that direction. It's scary. And when obviously you see it and you go down into the lower time frames like we do, you know, you see them everywhere. You're taking sells down to buys, you're taking buys up to sells. You know, there's no end of opportunities that can be had. And this is where, like, Mark Douglas's first book comes in, The Disciplined Trader. You know, because once understood, you know, there's money to be taken out of the market everywhere. Well, I don't like to talk money, the percentage. There's percentage growth to be taken out of the market everywhere. And it's only a matter of time of you dialing in your craft and your skill. You know, look at a joiner. Starts off sanding a little plank, ends up cutting a tree down to build a full kitchen. You know, I've met a guy that's done it when we were doing the granite. He literally used a pile of oak trees and built the most amazing kitchen I've ever seen in my life. So don't ever think that your steps are unnecessary, because they are. Because every step you take builds a bigger picture, builds a brighter picture. But you know, yes, we all have some shit times. We all have some, but how things are starting to clear now, and I'm able to see them show, and have discipline enough to wait for it to come back to the candle I'm looking at. You know, that didn't break. That didn't break anything. That just stayed within there. So I won't be looking at that. Yes, when it comes back down to that area, then that'll be an area of interest. But right now, I only want to know what's going on close to price. So I'd be, when I'm trading, you know, here, didn't break, just swept, came down, broke, left an engulfing setup behind, inside a bank move. You know, the last down before the up pressure is what they class as the banker's candle. But then on the way out, it left two engulfing setups to break everything. So you get your fib. And you can either take your 75 or your 86. You know, you've got an engulfing on the 75 and an engulfing on the 86. You conservatively come smack bang in the middle or drop down a couple of time frames. What's time frame saying? Get that for an engulf, pretty much bang on where, if we go down to the 1, see if we can get it any tighter. No, pretty much both line up. Look, what's that there? Only want to know if it's an engulfing setup. So that is, and it falls on where my other line was. You've got one here, it's only been back once. So that to me, with a flat red top, selling pressure to cause a buy ripple. Been back once, and I'd also mark that one because it's right in the middle of the discounted zone. So when that trade come to be looked at, I'd more than likely split position. Could have them both out because of how far away it's gone. But there's a higher probability you're going to get a rejection to at least here. You know, so conservatively, you take highs, lows, 2 off that one, and then if this one comes in, you're a bit tighter. You only need a wick, give your bottom a little bit. Previous highs, you know, you're 4 and 2. So if you have a nice little rejection, you've took 6%, and they're both very powerful engulfing moves. But yeah, patterns. This is what we're here for. So get rid of that, get rid of that, get rid of that. And we all know about algorithms breaking and here. Okay. We've had the accumulation build up. Yeah. We've had liquidation out, which has took the highs. It's accumulated. Sweat them highs as well. If accumulated there, then sweat them highs. Accumulated again. Sweat them highs. Just with a little wick out. You know, it's nothing really. But you've had a big push in one direction. Okay, which has left a bank move behind that. Okay, they came down, didn't take the lows, back up to 50% of the reaction, came back down, tagged in off that candle. So you'd have been on top of that candle, covered your accumulation, gone to your previous highs, you know, 4.6. Because of seeing an accumulation and a strong breakout that broke the high. Yes, it took an hour, 1 hour, 1 minute, but then it bought you in an hour and 20 minutes, sold you out 2 hours. So for 2 hours, you've made 4.6% growth on your money just from seeing an accumulation build up. It's not about looking at absolutely everything. It's about defining what you look for, making sure it ticks your trade plan, and entering regardless. And this is the power of the patterns. Being able to see them and watch what happens. Here, big engulfing setup, broke the highs. And then it took the highs. So you'd sit on that. Yeah, came back, gave you previous highs. She goes smack, you wouldn't head for the top, you'd probably go for the top of that bank candle. You'd be in there, lows would be covered. Previous where it came down, you took 3%. This is all one pair, guys. I'm not quick little stream, little 1 minute of that. Sideways. You'd have actually been at your screen when that happened, but again, if you believe and you sat there engulfing that came down and broke, sit on there, cover your high, previous low where it is now, you're 3%. So yeah, the main objective is wait for your confirmations and then look for a pattern that's being formed through an accumulation. Don't act until you've had an accumulation build up. Here, got bank move behind. Yes, it's a big one, that. So you'd wait for another reaction, which happened after the break. Accumulation, took the lows, took the highs, set up on that candle. Cover your low. You'd be in drawdown for about 10 minutes. Previous highs, 3%. Did go the day for 5, but 3% conservatively every day's. If you're compounding, is that my compound? No, is that? No, that. Okay, so let's just go calculators. Compound. Oh, wait. Compound. Okay, so ballpark figure if you so you start your account with 500 quid and you trade, I don't know, 75 times a year. It's not much. It's 240 trades in a year, days. So, you know, that's what, in a quarter of the year, I'd say, and you gain 3% a day. Okay. And bear in mind the compound effect is 500 at 3% with 15. And then you're doing 515 at 3%. Okay, so over 75 trades, you know, you've got from £500, you've got a comfortable 4,500. And that's just working pretty much a third of the year. If you bought, I don't know, if you was full ball for a year and you did every single day, got 3%, no messing, compounded it every single day. You know, for a year, you're talking 600,000. Nearly 120,000% growth. You know, for 1 year. So it's definitely worth being disciplined to your plan to create that kind of capital. You're not working harder, you're just looking for a trade like that every day. 3%, engulfing, break a structure. Doesn't matter what's happening back here. I've come to realise this. If it's going up, look for a break, look for a candle, because it's going to carry on going up until you meet an area of resistance. I've been waiting, trying to catch the return move. I can get what I need on the way up to it or the way down to it. You know, it's only got to show me an accumulation phase like that. It give me my previous lows straight away. And I'm out, I'm done. So, time for me to get serious next week, guys, I think. If we just go 5 minutes, and I'll go down each pair for London and for the last session of every pair. And we'll go from the 5 to the 3 to the 1. Okay, so there's your engulf that went into liquidation, that took out the highs, came back, tagged in. You know, that went for, if you're trading session to session, which could be a possibility, that went for 17%. Okay, from seeing London come down and create liquidity, you know, there was opportunities on the way up, it broke, came back to its bank candle, covered the low. You know, there's another opportunity there to go up with for another 14%. So overall off that pair, you know, you're looking at nearly 31% gains. I'm guessing if you go 3 minute, no, I am 3, so look in the 1. That's where we are now. Want to be back here. There's that engulfing there that you just missed. But if you'd have been there, you wouldn't really call that a break. I'd have waited for that. So that's a bit of a tricky one, that really. It's where you know, they just missed you. So do you take the range of the price of where the flat bottom was? To me, that's where all the orders were put in, at the flat bottom. Cleared the orders out, took off for the day. But again, we're just looking at London to New York each session for engulf buy up. You know, so you're 34% up just off the GJ on Friday. You know, it's crazy, guys. Even if you just took one of them. And then we have a look here. London. Come into London. It's broke the accumulation. Okay. You'd be looking either there, which you miss. Never came back. So that's still open. You know, so there's nothing in my eyes there. Let's mark that up because that's a 5 minute. And then that's what took the lows. So we'll mark that up. This is where you got to be careful with some pairs, you know, just stay away from ones like this that have got multiple candles until they've reacted. You don't have to trade every single pair. You know, sometimes we are waiting. Yeah. So you had the breakdown, left the engulfing, which is an area that's open. So I'd mark that up for a reaction when it comes back down. Had a big engulfing setup there. Once you'd broke, you'd wait for another break. You know, you'd possibly lay a position on there, but it never came back. Then that happened. Following price again, it broke. So you cancel that position, set up on that one. But when it cleared the highs, cover your lows, set at, I don't know, 1 to 5, come back at 9 o'clock, see what's happening. You know, you just, is that 9? No, 3. You set till, I don't know, when's good. We're going to start coming on hopefully about 9 o'clock most nights. So we set to close out at 9 when we're all on, and we can close out profits, you know, close out profits and have a look at losses. But waiting for an engulf and a break during London and New York gave you 4%. Yeah, you were following it here, but nothing ever came back to your candle. Currently riding at a price now where it broke and give you an engulfing setup, you know. So if these are the only candles we're looking at, that's going to be your next area of interest. Bang, bang, back to your previous. Regardless, win or lose, you've got Mr. Big engulfing set there. It goes into liquidity. Came back, cleared out, blasted off. Okay, so you're 4%, about 38% now, just from an engulfing setup. Here, you'd have possibly lost this. This would have been an L. Well, would it? Yeah, you've got your engulfing there. But if we're looking at current price, when we come to screen, 6 off 6. Yeah, so you will possibly be looking there, and you've got that one sat there as well that caused that. So you'd be looking at that when it's pushed away. Somewhere here, you're just setting and walking away. You're going to cover your flat bottom, that double flat bottom Power candle. Over that, but look, they get you. So you cover, you must always be vigilant. If you've got a wick next to it, give it the wick. Previous lows, you know, that give you 7%. So you're up 41% just from looking for these power candles. Yes, it came back, never came back again, went away, couldn't break, came back, and then took the market. 9 o'clock. Like we say, if we're coming to screen at 9, when we're gonna hopefully be on. At 9 o'clock, you're there. You know, you took 12%, just closing out at a certain time, looking for a certain candle after a certain things happen. So you're up, I don't know, you're up nearly 50% now. So what we got going on here? So this, the break going into London. It's a bit wishy-washy. This, they've took the stops out, took the lows, created a bank move out of there, and then it did. But again, if we're waiting until 9 o'clock for your previous highs, you would have lost that one. In the end, 9 o'clock, you know, you're not going to win them all. But currently, this loss doesn't really matter because you're up about 50%. Discipline to what you're doing, time, structure, candles that you're looking for. Okay, coming into got the breakdown, but you're buying, so you're not looking, you're waiting. You're waiting. It's sweet. Some of the sweep that IPA in that candle. Left and engulf. So regardless whether it's going to carry on down, I'm on that candle for a buy. 9 o'clock. Where it is now. Come to screen. 9 o'clock. It did go for 15%, but where we are now, you know, 10%. A loss here. There's no engulf. It's drawing my eye. That's too wicky. Got that there out of Asia. It's pretty much the only one I'll be looking at. Got that one, but it's after a push, so I wouldn't be looking at that. What's down in the 3? Now there is the engulf that broke and then came back. Now you'd got your previous lows from that. No, you wouldn't. You'd have lost. It's a loss. Taking from that, engulfing there, covering your accumulation. Possibly that IPA, with it only being 2 pips. You know, you're at 4 points there. Going till 9, it blasted you out. You know, try and create a simple thing that you do every single time. You know, it did go for 8%, but ultimately they came back for that. That came out of that accumulation, bank move. You know, so if you was looking that far back, There's a massive engulfing setup there. But how we're doing it, the break, then the engulfing setup here. What's in the 1 minute? Yeah, see there's an engulfing setup there, but it's not. It's an engulfing that's mitigating an engulfing. So yeah, you'd definitely be sat there. Both got level bottoms, level bottoms. So regardless, that's where you'd be. Shown the sign, but blasted out. Might have took profits there once it cleared them highs, but if we're following rule to 9 o'clock, well, as soon as it's happened, I want to be going about my day. Euro card, 7 o'clock. Okay, so market's selling. You've got a higher high. I'm looking to sell off here. I've waited. Now we've had a few engulfing moves, pumping down, which has pumped the engulf there. So you sit on that, flat tops. How conservative you want to be. You know, I'd probably go for that red there, just on the sole fact all these have mitigated each other. Previous lows. Again, if we're going to 9 o'clock. 9 o'clock. Just letting them run. That went for 9 o'clock. The 25%. You know, time structured analysis. Euro chief. We had some big moves in London. Is there an engulf? There's a couple. That one, it'd have wicked you out, even if you'd have covered that low. So that would have been a loss. And then you're just waiting. It's touched high. You've got an engulfing setup there on the way up. It's not been touched. You know, they're not daft. Not daft at all. Right, some pairs are smarter than others. I know it sounds daft, but it's not. Some pairs are a lot smarter than others. Whether they have better algorithms, I don't know. But we're looking to buy. They bought off an imbalance candle there. I'm guessing if you go 3 or 5, what you got there? So you've got that. It's not been back yet. That's not been back yet. That broke. I wouldn't even look at that because it's not engulfed. That's engulfed at the bottom of the leg of liquidity. Got tapped open twice though, so leave that there. It's not been tapped. There's 3 areas of interest there, where at the moment we're in a sell here for 2.something%, but I'm looking for it to take at least that. Equal lows down here. now it's come down and mitigated and stayed under, I'll be looking for that to have a continuation to at least clear this leg and equal lows here. Okay, so that was a loss. What we got today, Euro NZD. Engulf there, but it's already tapped once. But I'd still be looking at it. It's tapped twice, I wouldn't be looking at it. That's my next point of interest there. Engulfing pretty much flat tops after a retracement. And we've got that one that cleared the highs and ultimately broke. Right. You missed that one. You wait for this going into New York. Showed you its hand. The engulfing. It's not powerful enough. You know, engulf that way and engulf that way and then sweep the lows. Showed a sign there, but we're selling, so we're not looking for that. Where we are now, it's creating accumulation, bank move. You know, so you're looking to take out these highs, but we're selling. So you're only looking, that's been back once, twice. At the moment, that's your candle. Just came down and sweep the lows. Guessing if you break, go down a bit. Let me see it there. There you go. That would be the budget. Get that line. Have a look what's behind it. You've IPA above it, so it's a bit risky. That's been back once, twice. To me, that's your area of interest there for the next sessions. US Chief. Whoa. Sam's actually in this at the moment. I'm looking for it to retrace. But here, you know, there's some big manipulation. Big open order down here. There's a couple on the way up that caused the ripple. One there. One there. One there. They're the only candles I'm interested in. That's been back. Could have caught that, but it didn't break. It just swept. Could have caught that one because that swept again off that candle. But you're already into the leg, so you wouldn't even be looking. We go up to 9. To 9. Yeah, so it went all the way up. So depending on where you got your stop take profit, you did get 14%. If you let it run till 9, where it is now, you got 4%. So again, if we're just doing strict time-based trading, yeah. find it, let it play, close it. And you'll build that belief in the times you're looking. And, even if you chose to come in at New York, let's just go back through these and change. Yeah. Change to the end of New York. Or even so you want to be looking at about 3:10. Say half 3. Half 3 on that one. We lost anyway, but peak of the volume, we want to be cancelling our trades, really. So half past 3. Half past 3. We're still at full profit, but it would have closed out there. Just come in, turn them all off. You've still 23% out of that. So if we say half 3, let me get my book. Get this wrote down. Oh, baby. I'll finish this and I'll be in a minute. No. Fingers. So trades we want. Let's trade confirmation. Let's do it on here, shall we? Trade confirm. So checking trend. We're waiting for a break caused by engulfing setup. Check. And then you'll lay fib. Check. Discounted draw. Check. Once this thing disappears, should do. Got motorbike next door if you can hear it. So trade confirmations, checking the trend, waiting for a break caused by an engulfing setup. Okay, so you're buying, you want small green, no, small red. Oh, sorry guys. Big green. Okay, that'll be engulfing that way. Then you're waiting for your break. And then obviously it's vice versa this way. You want your small red to go against your big green. And that power them guys, if there's no wicks either side like this, you know, there's so many orders built up in them. And then we're checking the 135 minute time frames for the best one of these closest to the leg of the push. Okay, and we're going to lay the fib, check for the discounted zone, which we all know about the fib. You know, that'll give you a premium. I'll just pull it off there so you can see. And that gives you your premium zone. Once you've got your leg of price, once they start to come back down, and then it's other way as well, vice versa. If they're coming down, you lay the top and the bottom, you know, and then when they're coming back down, you get to the 50 or 86%. Once it comes into the 50, they're in valid discount range, so they could turn around at any point. And that's why we only use certain candle setups to bring down the probabilities that we're in the right area. Then we're going to check for imbalance sat on the engulf. So basically for that, you want red, a green. Oh, I've done it again. Sorry, guys. Red, and then a big green. Right, say like that. And then, in fact, let's just open that up a bit and open that up a bit. Okay, and then give that a little bit more. Numbers aren't it, wait. And then you've got another, I don't know, say another greenie there. That's just price is just pushing this part here where say there's a wick there and a little wick there. That bit in the middle from wick to wick is that's classed as imbalance in the market. Okay, sat on an engulfing setup within the, you bring that down, in fact, if we bring that to there, get rid of that, where's my line? Okay. So you've got imbalance, sat on a bank move in the fib zone. It's absolutely beautiful setup. You've got a couple of lows over here. Just cover them lows with your stop loss. So when you see this happening, set up on that as soon as it breaks the previous structure. Go to wherever that stops, or like we say, I'm looking at coming at 3:30 and closing out regardless. Which is working quite a few times, but sorry guys, let me. So me check for imbalance, which is here. Oh, come on. Let me just lock that. Right. So set your TP at your desired, whatever you're looking for, whatever your wealth barrier lets you take out the market. Come back at the height of the volume, right? So I was looking at coming back at 9 o'clock and closing out, but market's gone flat by that point. You missed out on, I don't know, some really high volume. So if you look to set as quick as you can early morning, say you find 5 that look really nice, you put them all on, and then walk away. Now it's easy to say. Now I get that. It's very easy to say. But this is how you're going to build belief in yourself in the areas you're looking at. I've gone down probably 8 or 9 pairs there, pulling best part of 60% through following a break of structure and engulfing candle. No other candle. We're not looking, I thought they were sort of fake out candles, but they're really not. It's just picking the right one at the time when the candles are forming. Once you find a break, everything lines up, you go in regardless and build a structured belief in your area. Now, I know a lot of people who trade with me understand what that is, so I'm not really going to break it down. Wins and losses are all part of the process, and these are why we have confirmations that give us a higher probability of an area going to either come back to react off and then go for the rest of the day, or they're going to come back and blow straight through because they see how many people are sat there. There's been a couple of times this week where I've just been wicked out. I've not, because rule of thumb is we don't move anything. And that's how you build the belief. You're not, when you start moving things, you start gambling with your own money, if you're trading prop money, it doesn't matter, but you're not building a strong belief in that pattern of that, your rules. Everything needs rules. We all say rules are there to be broken, but in this industry, they're not. Rules aren't made to be broken in this industry. So that pretty much, you take a snippet of that or whatever you want to do. There's quite a lovely little explanation of how we do what we do that. So on to the next. In fact, I'll do patterns on the next one. Where were we? Carry on with the London till 3 o'clock jobby. Okay, so again, we're only looking for engulfing banking moves. We're in the 1 minute. So if we start in the 5, we've got there. Yeah. Let's pull it this side. the engulfing move has swept the highs, which has left it behind. Okay. So you pull your position in once it's swept the highs at that candle. So you bring your position onto that candle. It's not been back. Cover your lows. We go till 3:30. You know, you took 9%. Because of that strict rule, you know, that leg that broke it from the engulfing setup sat bang on the 75. They came all the way and cleared everything out, but they didn't take the lows. High volume, highest volume give you 11%, but if we're coming at 3:30, just as it's starting to wind out for the day, you took 9.5. You know, I think, guys, you cut off 5 minute. Okay, so you're looking to sell. So you'd have lost here. You'd have lost both ways. Took the lows out there, but losses are okay. Right. Because it's sweet, you'd be looking to buy because it's sweep the highs. You'd cover your lows, took you out 3:30. If you'd have covered it, they took you out anyway. But again, it's okay. And you can journal these very easily because you're playing over the whole day and coming in at specific times, setting your orders at specific times every single day. You know, you can set a journal up 7 pair, 3 percentage growth, loss, lot size. You know, you've got everything there, very structured over a day plan for one trade. Yes, you might take multiple, but start off with taking just 2 that you like the look of and follow the rest. You know, this is where you start here we're looking, we'll get this thing from behind me. There's an engulf there that's broke. They came back, so I'd have waited for the reaction of that and probably gone inside. It's their level. I wouldn't have even looked at them. We have a look inside this candle here. So as it's forming, you get into it. Once that's closed, start looking at what's happening. So you'd have missed, unless you were sat in the 3 when they sweeped and caused 2 bank moves. You'd have missed that bottom one, but split your position on that one and you'd have caught that one. Missed it again, it'd give you that one off that candle, that engulfer there. Always sit with an engulfing candle, nothing else. Again, you're refining you. It's gone up, it's took the highs. You sat on the engulfing move there. You've got your lows covered of that area. We're going to 3:30. You weren't taking much out of this one, but nonetheless, you were taking profits. You know, it's not about hitting the big home runs every time. You know, where you were there, it bounced off as an engulfing. We've sold out at 1.9, but it's 1.9 that you wouldn't have had. And all depending on how you acted through the day and what you were looking at, you might have sold out at 1 o'clock, you might have sold out at 12 o'clock when it started going sideways. But looking at how we're doing it, to how I'm looking to do it, yeah, come down, you broke, engulf that's come into London and caused the engulf that broke. So you'd be sat there. This would have been a loss at 3:30. There. 3:30. Around there. Could have took 8. The previous highs would have been 14. Conservative. You'd have come to your top of your discount at least. So what we got? Oh, that was gold. So no wonder it was a bit, bit wicky here and there. Bitcoin. Okay, going into London, we got it's in the one. Anything that stands out? Not really, other than that one. I never came back to that. So that's still an open order. Yeah. What's that there? Possibly have that. No, it's not engulfed. What about the 3? Yeah. Have you there? That was engulfed. It broke the structure. Again, that went beautifully. Yellow candle. 3:30. Somewhere here. 13%. Do one more. Do US. Dow Jones. Okay, so it's selling in. Looking for a break and an engulf. What we in? 1. Let's go to the 1. London. Looking to sell off. Okay, so only one that catches my eye really is that one, because that came and broke. So you'll be on there, cover your accumulation. 3:00, 3:30. Really keep going. Make it 2. Come back at 2 and close out. 2. Check 2. Half. No, that went for 9. So let's just quickly whiz through. Half 2. We give you nothing. No. So Forex 3. Bitcoin, Forex R3, Bitcoin R2. But loss, let's get a pen, let's get through it. So losses, wins, no trade. We've got one loss. One win. 13%. I won't count the second. That was just if you missed the first. Yeah. We take a trade. Yeah, I would have done off that. Very bottom angle for the top. That one. And then came back. With my bottom wick. Half an hour. 3 o'clock. +3. 4.5. This is 15, 30. Shut off. Forex. That one until R3. Yeah. 3.7. G-card. We go again. +3. +3, give me 7.2. +3. Loss. +3. Loss. +3. %. No trade. No trade. UJ. No trade. Good. Loss. Right, guys, let me just calculate. Okay, so 84.9% growth over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 wins, 5 losses, 3 no trades. So just from doing that, looking for a break into the session, picking your candle. Yeah. This big box. Yeah, I went back on GU and did it. I think that's an element that we need to look into. Obviously, closing out at high volume. Yeah, 84% over 10 wins, guys. We've got wins and 84 losses. Oh no, let's not call them losses. Lessons 5%. So yeah, 79.9. Over pairs. Bit bigger. If I did I do that? Marking up, I'm opening with this one. Let's just jump out and see if it's out there. Okay. No. Anyway, guys, that's the overall of today of what I've seen. Just looking for a break of structure, an engulfing candle, and turning trade, exiting trades at 3:30, just after the volume. So nearly 70% growth. So it's a case of looking, picking the pairs that you really like the look of as it's forming, laying your confirmations, and getting in regardless. Win or lose, that area has met your criteria to trade. Okay, so let me just see where that, so we can get one last, there we go, it's on the next one across. So where were we? 5, zoom in, let's get this little diagram up. You see there's a live one there. That's lovely, lovely. Accumulation, engulf, you're in, you're 11%. So that, take a snippet of that, guys. That is very beautiful. So what I'll do, I'll stop share now and get this. Take a snippet. We're away. Yeah, the camera's not on, guys, because it's going a bit funny getting like these green matrix lines down it. It does me head in, gives me a headache. So I'll just turn the camera off. But yeah, the good session that really. I'll do another one this afternoon on the 2 patterns. Get that uploaded this afternoon. I don't think there's much more to say, guys, if I'm honest. Thanks for watching. Get as many people to like, share, and subscribe as possible. Helps the algorithms. And yeah, let's change some lives, guys. It's a very simple way, simple mechanical process where you're literally waiting for the break, looking for a really nice engulfing candle with IPA in the fib zone. And you're setting up regardless. Win, lesson, whatever, set up, build a belief system in yourself that what we're doing is right. We know the market breaks and we know the market has to retrace. Build that belief in your trades. I've got a friend, Sam, he's been trading 3 or 4 months. He's already taking money in his bank. That's a choice he made to open a live account. And now he's feeling that every trade he takes needs to be right because it's his real money that he's putting in his, he made over £120 yesterday. That take him and his missus out for dinner, whatever, paid for, done. It's that simple. You've just got to be disciplined in what you're pressing and where you're pressing it. Okay, guys, so I'm going to shut down now and get it uploaded. Hope someone gets some kind of value, interest, knowledge. I just try and share as much knowledge and as much value as I can. But you can't ignore 70, nearly 80% gains over 18 pairs. And that's from following a simple mechanical structure, a break, an engulfing IPA fib zone candle, and you're in. It's that simple. Come just after the volume to close your positions. Rest of your day's your own. Even the beginning of the day, if it throws it out early enough. Anyway, blessed day, everybody. See you on the next one. I'll try and get the patterns one done this afternoon because I think that'll be a very, very vital video. And peace out. See you on the next one.